What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me today. From the low of the day, low of the week level, straight to the new high of the day, high of the week level. Here we break out. Again, Wednesday breaks out of Tuesday's high boundary. Other time frame traders are triggered into the market. You can see that we have this nice little trending day until New York opens. We have this M formation at the high of the day going into New York. We trade back down here. Now, here, remember we have other time frame traders. Here, potentially, there's trapped volume in the market from yesterday. Okay, you can see the engulfment even on this higher time frame, right? Here's the engulfment. Traders are trapped in the market there. Traders who went long into the high of the day, they were buying into the high of the day as New York opened, okay? And then now their accounts being eaten into, right? And then on this day, we're going to zoom in on this day and look, because this was a really nice opportunity, right? So when Asia trades, we get a high of the day right here, okay? This is like the high of the day so far. We also get this low of the day formation right here. And then we proceed to trade lower, right? So we get this low of the day formation, then we trade back higher, right? Now we get here to the New York open and we're trading back into the high of the day, right? We are at the high of the day. Look at these beautiful equal highs, by the way, right? Remember our discussions about weekly and daily charts? Oftentimes when the market shifts from bullish to bearish, we will get these equal highs, okay? And traders have shorted the market here at these equal highs. Traders have also bought into the high of the day, right? This market looks like we have the low of the day in place and now is making higher highs going into the New York session. As soon as we break through the previous day's closing price, traders are buying, okay? Now let's go in on the day, take a close look at this. Okay, check out the trapped traders, the trapped volume, okay? Let's actually remove some of that noise. All of these traders are trapped at the high of the day level. Here is our large, M formation, the engulfment, right? When we drop down to the 1 minute, here is our M formation, the small pattern inside of the larger pattern, okay? The engulfment, trapping these traders, okay? So these traders are trapped on the smaller time frame, right? But these traders are buying into the high of the day level, okay? There are traders buying and selling the market, okay? All of the time, buying and selling, because if there's a buyer, there's a seller. If there's a seller, there's a buyer, okay? Doesn't this shit make sense? If we have people selling the market, there's also people buying it, Okay, it has to work like that. There has to be people on both sides. All right, so we have traders who are buying into the high of the day. Okay, they're buying high. And we have smart money who is what? Selling high. So if they're selling, they need someone else to take the other side of their trade. Okay, and this is all of this is the manipulation. This is the inducement. All of this price action, these pokes, all of these pokes, right? Higher and higher and higher. Can't you see what's going on? We're making new highs, right? Traders are under the impression, right? Because we're getting higher highs going into the New York session. New York is just trading higher. New York must be buying the market up, right? But no, we're getting these pushes into the high to trick traders into buying, okay? So they're all buying. Where are they buying at? They're buying at these bottoms, okay? Traders have bought at these levels. So if they're in right here, their stop loss might be down here. Some traders, depending on the time frame they're trading on, right? But we have the previous low. This is the target. This is where we think stop losses might be. And just look at how perfect this thing is, right? Comes up here, we get our little M formation, and we drop where? Down here. But immediately we go straight, no heat, bro. No pullbacks into your position. If you're trading with smart money, these traders are not being let out of the market. Not yet anyway. At some point, right? Price is going to trade back into that, right? But here, they are all dusted, bro. They're done. Their account is being eaten into. We trade where? Directly back into this low of the day level, right? And we pull back here. Pull back. Bam, smash through it to take those stop losses and then some, right? And now we don't predict price. We don't know what's going on after this, right? Price could very well, just turn around and go back up. Who knows? But that was a beautiful opportunity on the day. You see we have these three pushes into the high of the day level here for the big move on the day, okay? It's a opportunity on the day. I don't swing trade. I don't give a damn about none of that. I ain't holding nothing, okay? I'm trying to make a good trade and get out of the market. This was a beautiful trade, okay? Look at gold. Gold gives you about the same scenario, right? Now we've been making all-time highs. We just got nothing but green days, green weeks, right? And then bam, look at this. On Wednesday, we have a market that for the first time in a little bit gives a lower close than the open. Okay, that should draw your attention. This is what Stacy would call a first red day. Okay, this is a first red day. Hello. First red day there. Now, remember, I am just hitting these things quickly. I'm trying to get out of the market. Why do I need to make, infinite amounts of money every day or something like that? Look at this trade, okay? All of these buyers right here, anyone who got into this late, right? Anyone buying into the high of the day up here gets trapped. You can just see how they're trapped. And what time is this all going down at? Very curious, right? 9:30, we get this brilliant opportunity to scalp the gold market, okay, and take advantage of traders who are buying into this high of the day level, right? And we're not trying to hold this thing forever. You can see, we talked about this, right? We do have this breakout here, but where the real impulse move is right here. Big move, right? Here is the original breakout. This is the anchor point for the pump and dump. You see, right? We got these 3 pushes into the high of the day, trapped volume here with this engulfment, and you don't have to trade this. Like, you don't have to trade this right here and get in on the 1 minute chart up here, because look, it breaks down, bam, all of this volume right here, they're trapped. Okay, they're trapped. We pull back where? Right back into this that was providing support is now providing resistance right here. We pull back, trade here, bam, and you can get in right there, stop loss above that pullback structure, target the last low, which would be right here, and let one run. But you have to be willing to get out of the market at the first sign of weakness, right? Because like, that's what I do, especially on things like gold, the US 30. I'm getting the hell out of there because I don't want my fingertips bit off, right? From being greedy. And you can see that first sign of weakness, bam, we get a small engulfment to the upside, right? And it never dips back down here. So this was going to be, if you were going to get out and you got out down here, you did very well, right? And then if you kept holding it after that, here was your original position. If you waited for all that confirmation, right? And we're trading back into that now. All of your profits are gone on the day, right? We're day trading, bro. We're trying to get in and out. This trade started at 9:30, right? But maybe the entry is around here. So 10:10 until 10:30, right? So 15 minutes, bro. 15 minutes and you're out. You're gone. Okay? You made your trade. You did your thing. Cool. All right? This, oh my God. You know what I'm saying? Other time frame traders triggered into the market when we break this high of the day level from the previous day. Here is our 3 push pattern Stacy Burke talks about all the time. Okay? Now, let's just drop down so we can see up here, right? I just want you to see all of this magic. Okay? Trade up, give this little middle structure, trade up, bam, we engulf that whole structure. Here is the small M right at the high of the day, right? But it is inside of a larger pattern, okay? Which again is inside of a larger pattern, okay? And it just is sort of what it is. It's a big pattern, small patterns inside of bigger patterns, right? Because the market's fractal. All of this is taking place, right? If that trade is going to happen, who's the first trigger into the market? 1 minute traders, right? But we have all of this trapped volume, right? If we zoom out again, all of these traders here that bought into this market, right? Because smart money is setting up a sell high opportunity. They need someone willing to buy high. Remember, there's a buyer for every seller, a seller for every buyer. So if smart money is selling this market, there are also traders who are buying this market. Why are they buying it? They're breakout traders, bro, okay? We had this low put in place, and then on this day, we break out of that high of the day level here early in the Asian session. We pull back, London trades higher going into New York, and we're in breakout right here. So breakout traders are buying this market. New traders are buying this market because it's going up, not knowing that they're potentially buying into the high. They just bought the top, okay? They bought the top. And where does this trade go to, right? Straight to the previous day's low of the day, and then it starts bouncing around, okay? It already did its business. It did what it was there to do, okay? So we're not trying to hold these things forever. And again, if you didn't want to get in right here, if you were uncomfortable, we still have this major engulfment, okay? And we get down here, we have this small pullback you could have traded, or this larger pullback, right? We have this pullback. And what is that, huh? Here on the 1 minute, look at the pullback. This is the trade at 9:30. Okay, we have more traders that are trapped in here. Here's the M, here's the engulfment, right? Now, there's also the smaller pattern inside of that bigger pattern. Okay, multiple ways of entry. Okay, for the pullback. And that's a beautiful, beautiful trade. And how much time does it take? Right? 9:30 to 11 o'clock, so an hour and a half. You're done. You're out for the whole day, bro. For the whole day. This could be your whole week. This could be your whole week if you're just patient and you wait. I mean, bro, look again how perfect it is. Like, look how perfect it sets up. Okay, we're at the high of the week. Okay, we broke out of the high of the week level, so weekly traders are in here. This is potentially driven by higher time frame traders, such as weekly traders, daily traders, 4-hour traders. Everyone is triggered into this market. And we get an explosive opportunity from one side of the range to the other. Now, why would you not trade this, right? And only trade your favorite market, and it's going to look like, anything else. It's going to look like this at 9:30, right? And that is a beautiful opportunity, so I really can't talk about that. But there are just going to be markets, right, that don't set up so pretty on the day. Like this might be a little sketchy. When there's setups, right? But some of them might not be so clean, okay? They might not be so clean, and they just might not stick out to your eye. But for me, when I see this thing setting up, I'm watching, bro, okay? I'm watching this at the high of the week, right? Just a nice opportunity, man. Anyway, until next time, I hope you continue to free your mind.